Good afternoon, everybody. I want to thank you all for joining me today as we are going to go over IAMS' new product line with Delaware Life. Great opportunity for accumulation for your clients. I'm going to run through some housekeeping items as quickly as I possibly can so that we can get into the product information. We have a lot to cover today. First thing I'm going to go over is our new producer builders program. This is within your first 6 months or 180 days of contracting with us here at IAMS. Can you all see my screen? There we go. This is within your first 6 months or 180 days of contracting with IAMS. As you can see, we have lots of levels built in here for you, all the way from $100,000 to $1 million. A lot of personal perks, business perks, and marketing opportunities for you to qualify for. If you want to know where you stand toward your new producer builder bonus, it is a great conversation. Please be giving us a call here at IAMS so that we can discuss how to get you to that next level or to get you cashed out on the level you have obtained. Next thing we're going to go over is IAMS business builders that we do have available for you. Our referred producer program, just like you out there in the field, one of the best referrals that we can get is a referral from one of our valued agents. If you do refer an agent over to IAMS, we are going to do our best to get them contracted with IAMS, and you will receive a $50 one-time bonus. Once your referral starts writing business, you can receive thousands of dollars that we do pay out quarterly. I know Steve, Curtis, and Charles all sign checks every quarter for thousands and thousands of dollars. Rough numbers on that is 20 basis points on index annuity premium, 10 basis points on MYGA. You can see the rest. And then the next thing that we have after your 180 days with IAMS has lapsed, we do have our marketing reimbursement program. Rough numbers on that is $100 goes into your marketing reimbursement account per $100,000 of fixed index annuity premium that you do have go paid. $200 for single premium life and $200 for every $10,000 of life target premium. Next thing we are going to go over is the back office support, which is the core of IAMS. We were founded by Charles Hiring over 35 years ago now, based on the support that we provide our agents. We will do everything from your case design to getting you all your illustrations, getting your appointments in, getting you your product training. Once you get your app written, as long as you either do it through our Firelight platform or send it to us, we will get that application scrubbed, get you out any corrections that are needed, and submit that to the carrier on your behalf. And then follow up on that case every 3 days to make sure that that does process in a very timely manner for you. We do also offer top sales expertise and coaching. We have 30 plus years of expertise on both the life and annuity floor, but we also have external coaches that can help you to become an expert in a field that you desire. And then we do have paperless contracting through the Assurance Bay platform. Next thing we are going to go over is our Firelight system, which you can access at IAMSinc.com. Great way to get some extra comp before you ever write a case. Make sure that you won't receive extra commission for doing an e-app. It is a lot simpler than you think. If you ever want assistance in getting through a Firelight e-app, anyone on the life or annuity sales desk would be happy to assist you. It does offer accelerated applications. Most of our carriers are on the Firelight eApp platform system. Just a much more efficient way to do business. Next thing we are going to go over is our creative marketing solutions that we do have available for you here. We have a full in-house creative marketing team here at IAMS that are able to get you any turnkey items within 2 to 3 days that are personalized with your logo and your brand. The other thing that we offer is agency solutions. One thing I would say is that if you do not have a custom brand, I would highly recommend that you do so. That is going to help you grow your natural market very organically. And then the one thing that everyone is looking for are those digital marketing solutions. We can help you with that as well. Next thing we're going to go over, as I mentioned already, is our IAMS website, www.iamsinc.com. I know that there is nothing better than talking to us personally on the phone, but a lot of the stuff that we access for you is available on the IAMS website 24/7. And then we do have our sales resource library under that support tab. If you have not registered for our website, I would highly recommend that you do so. We'd love to see you on there. Next thing we are going to go over, and with that, I am going to launch my first poll question. I do appreciate everybody's participation in my polls. The quicker you answer, the quicker I can close them out and we can get moving on. Would you like more information on IAMS Wealth Management? So about 3-4 years ago now, we launched IAMS Wealth. This is a department within IAMS that we have grown very organically with our contracted agents. What I will say for you is that it is going to increase your revenue. It's going to improve your client retention and strengthen that client relationship. I do like to always use the example of annuity suitability when it comes to IAMS Wealth. We all know that most suitability guidelines are 50-50 for annuity versus net worth, or 60-40. So let's say you've got a client with $500,000 in net worth and $500,000 they want to invest. Well, likely you're only going to get an annuity carrier that is going to accept $250,000 of that premium. Where's that other $250,000 going to go? Well, it's going to go to someone that is able to service that premium, which then puts you at risk of losing your client because they can sell them an annuity as well. So if you would like to have a conversation with Duncan, it's, we help you get your 65 and do everything to get you rolling. Next thing we are going to go over is our trip. Qualification for this trip does end June 30th of 2022, but that does give you about 5 months to qualify. 4.5 million points will get you there. We are going to take an incredible cruise through Italy, Greece, Montenegro, and Croatia. This is one of the most elite trips that IAMS has ever offered. Definitely a not want to miss opportunity. Next thing we're going to go over is our upcoming all expense paid Life and Annuity Academy. I'm going to launch my next poll question. A simple yes or no click would be much appreciated. So we have dates for our next Life and Annuity Academy. It is April 6th through the 8th at North American's home office. We do have limited availability. You should be receiving emails on it. Go ahead and get registered, and then we can talk about getting you qualified to attend. This is a great opportunity if you are active in the life and annuity markets and are looking for ways to increase your sales. We are going to have our top producers go over their sales ideas and strategies. This North American Academy is going to be very life focused. Not that they're not going to go over annuities, but if you are interested in getting more information on IULs, there's going to be a lot of information given on those tax-free retirement accounts that clients can build. These are a great opportunity for you, and we will be having another one sometime early summer. So go ahead and get registered get your name in for our academies. We are on Facebook, so go ahead and give us a like on Facebook and follow us on LinkedIn. We do have industry updates, advertising that you can use, etc., on both spots. And with that, I am going to turn it over to Jay Brown. He is Jay, do you have control? He is going,
I'm
he
going to
is,
unmute myself here. Can you see me? Can you hear me okay?
yeah, we can hear you great.
All right. I got Chris calling me on the other line, so that's kind of funny. Let me see here, and let me do my share screen as well. Thank you. My name is Jay Brown. I'm the Vice President for the Delaware Life IMO channel. We're excited to have your team on board here, and I'm excited that you guys were able to make it and join our presentation today. So really, this presentation is going to kind of go over Delaware Life as an organization, because obviously it's going to be a little bit newer to some of you, and it's obviously going to be newer to your client base, and including a couple of our main focus products for this year. And like Nicole had mentioned before, we're very focused on service in a lot of ways and how easy we are to do business. So I'm going to cover some of the carrier information, some of the product information today, and then on top of that, like how to do business with Delaware Life and some of the resources we have out there. I don't know what you have for questions, or if we're holding questions for the end. I see just a few attendees here today, so I'm open if you have a question. If you want to unmute and jump in and fire away, I'll either answer it on the spot, or I'll kind of say, it's down the road. I'll answer it in a moment. So kind of keep it as an open format. Feel free to jump in if you do have any questions. So Delaware Life as an organization, who are we? Number one, we're the old Sun Life. We used to be Sun Life US. That changed and came over to Delaware Life in August of 2013. We're a US-owned, US-based organization, and all our employees are in the United States of America, with a couple over in Ireland from the Sun Life days that work in the call center. So sometimes when you reach out to one of our teams and you get one of the Irish Brogues, that's one of our groups out there in Ireland. They're a great group. They've been with us for a number of years, so a lot of fun out there. Who we are as an organization is we're part of Group 1001. That's our kind of umbrella company. They own a couple different insurance organizations as well. And why that's beneficial is we share services amongst this. So we in share service, like maybe an investment team, legal team, like HR. So it helps us as an organization keep our costs down. We can keep our costs down. You're going to see the costs go into the product. And as an organization, so we're the old Sun Life. We're an A minus through AM Best, and we've held that outlook for about 6 or so years now. We're pushing very hard to be an A at some point, but we've noticed that these insurance rating agencies aren't too quickly to bump people up. So we keep working towards that goal. We're executing on our financial plans to get us to an A, which will be, of course, a big game changer for us. We are not a small organization. Once again, old Sun Life. So we started into this business without a product for sale with about 30 or so billion dollars. To date, we've sold about $16 billion under the Delaware Life umbrella. That's about a $2 billion year average. And that's across 3 different channels. We have our independent channel, which you guys fall into. We also have a broker-dealer channel, which is smaller, and a bank channel as well. So without any advertising, without any significant expenses in regards to marketing. We have been an organization that's been able to be very successful based off of old-fashioned referrals, word of mouth in the industry, and keeping selective partners like IAMS here. To date, $43 billion is the size of the organization, and $16 billion sold. So our main focus products are going to be retirement stages 7 and target growth, which I'll go over today. Here's a view of the uptick through the years. 1.4 billion in 2014, and that was all MIGA. And then we entered the index space, which has been very successful for us in 2015. And you can see the trajectory of growth. Each year we've, kind of gone up a little bit here. 2018 and 2020, big years for us, and we've kind of plateaued and leveled there. We're never going to be an Athene or an Allianz. We're not going to be a huge organization. We do not want to sell $16 billion worth of annuities a year. We want to keep it in a certain range. It allows us to price and invest accordingly, and that is the goal for the industry. So Delaware Life does not want to take over the world by any means. So the products I'm going to go over today. Let me back up there and pause before I get too fast here. Any questions of me on Delaware Life from the group?
I don't have any in my questions box. You guys feel free to ask any questions in that question box, and I will present them to Jay on your behalf.
Great. All right, yeah, so if there's any questions that do come up, please let us know. We have plenty of resources, marketing resources around who we are as an organization and our history. I know the Delaware Life name isn't as recognizable or as Sun Life, for example, but the contracts that we have in life insurance and even some of the index annuities go back to the Keyport days, where these products were sold in the 80s. So we have some of the older index products out there, believe it or not, and they're done through acquisition. So our first main product, which is going to be one of the primary 2 focus products for yourself, is going to be our 7-year accumulation. This product has been around since September 2015, so we're actually coming up on the first batch of ones coming out of surrender charge. So it's been our most successful. It's our easiest to understand, and you're going to see that design rhetoric through all of our products. Simple, straightforward, easy to understand products, which makes it easy for your clients to grasp how they're built, the chassis, how it's built, and then in turn, a lot easier to sell. So it's a 7-year surrender window, hence the name Retirement Stage 7. Built into the product free of charge is an enhanced minimum surrender value. And really what that is a fancy way of saying, worst case scenario, this thing's going to get 1% growth on the surrender value, and that's compounding. So, at the end of the 7 years, if for some reason the account value has not increased at all, you will still be guaranteed a 1% growth return when you surrender. The only rider that's available to add to this is a optional return of premium rider. It's a 40 basis charge each year for the 7 years that's on it. That's calculated on the account value on the anniversary date, and it guarantees the client will, worst case scenario, leave with the premium that they paid into the contract. So if you have someone who's a little on the fence about this, or something, that's a rider that they can add. We do see low usage of it. We do talk about it a lot. We get a lot of questions on it, but probably around under 10 to 15% of the contracts actually use that rider.
At what point can they exercise that rider? Is it 3 years?
They can exercise it at any point. At any point, they could 60 days in, 5 years out, whatever. They can exercise the return of premium. The longer you go, of course, and then let's say they've had positive returns through the years, there's a very good chance that they wouldn't even use the rider.
Right.
Down the road, that the declining surrender schedule with the positive returns would offset, and if they put 100,000 in after surrender charges, they might be at 101, 102 or something like that. So we would always give the client the best case scenario, whether that would be the return of premium, or if they've made enough money from there, they could just take the normal withdrawal amount and actually be ahead. So that is what it is. This has to be added at inception. It cannot be added later on. So either at the inception of the contract, and that's it. Also built into our products when I get to our rate sheet is our bailout endorsement. And one of the things we pride ourselves on, which is I think a differentiator for us in the industry, is the fact that we offer strong renewals, and we hedge that for the extent of the contract, where some other carriers might have what looks to be pretty strong rates up front that are hedged for 2 or 3 years of the 7 years, and then once you get out to year 4 or 5, then all of a sudden you have 1.5% or 2% caps or participation rates in 10, 15, 20% because they didn't hedge for the long run. They put it all up front. Now we get a lot of people who don't complain about our renewals, and actually we have marketing pieces and we do advertise it as much as possible, publicly show them, and I will show you that in a minute. In this product, is a couple different diverse indices. Our First Trust, Morgan Stanley, and of course S&P options. And I'll cover those in a minute. But one other aspect that is universal amongst this product, as with our other products, these are flexible premium products. So you can start a contract with $100,000 today, and then add 30, 40, 50,000 next year, and then 100,000 year 3, or continue to contribute to the product down the road, however you like. And each one of these contributions are non-rolling. What I mean by that is today's February 3rd, 2022. If you start a retirement stage of 7 today, that retirement stage of 7 is going to be free February 3rd, 2029. And you don't get silos of money. So if you had money in year 3, that bucket of money is not going to sit there and be in its own 7-year window. It's going to already have 3 years served of the contract. It'll be free in year 4. It'll come out a CDSC with the initial premium in year 4. So it's nice and clean in that sense, where if you do use this to add additional funds to, you don't have to track different buckets and when they come free.
Jay, quick question that I know everyone is going to ask.
Mm-hmm.
Minimal additional premium, $500. Is that annual?
Yeah, that's annually. Yeah. So when you add premium to this, we give you a couple options. I mean, obviously you can send in one check if you want and be done with it. But we also do like a bank draft as well. So, and the bank drafts can be done monthly, quarterly, semi-annually, and annually. So as long as the program, they could call it $100, $200 a month if they wanted to. But as long as the annual program is set up to exceed $500, you're fine. So we do get a lot of people who fund these like their own personal pensions, or their IRA make contributions to it. So yeah, we're pretty flexible and it works pretty well for people, and they can set it up automatically.
Just so all you guys know on this call, this is the only carrier out of all of IAMS carriers that will do this for your client. And we get asked this a lot.
Yeah, I guess it's something that's unique for us. We're so used to it that I'm surprised to hear that others don't. But hey, I love the tactical advantage. So, you can pretty much treat this annuity like your checking account in that sense, or where
your
you can
savings. Yeah.
Yeah, savings. You can just contribute to it whenever you like, however much you really like, as long as it's a minimum of $500 a year. The product availability is age 18 to 80. And we keep the plans that can be held in this product pretty simple. And this is across the board for all ours. It's either non-qualified money, traditional IRA, Roth IRAs, and yes, SEP IRAs. I know that's a little bit unique for us as well. So someone can start who has a business can start their SEP with us. They can transfer a SEP over and continue to use it. And that's a big factor with the contributions, because we know SEP contributions are much higher. There's much more options there than just traditional. So this product has 10% free after year 1 in RMDs in year 1 if you need to take them out. We don't lock them up like that. This is a little bit of an older chassis. Once again, this was built in 2015. So one of the differences in the next product, I will cover the 10-year version of this, is you do actually have 10% available in year 1. This one is after year 1. So it's got nursing home and terminal illness waivers built into it. That's pretty universal. You're going to see this same grid pretty much with some minor differences for our 10-year version. Commissions option, obviously very important. They are tiered by the age of issue of the contract. So, option one upfront is 5% upfront, so 7-year contract with a 5% commission. Option number 3 is also very interesting as well. It's a one-on-one trail. And this carries to our 10-year product as well. So we do see a lot of usage from individuals who are building out or have built out their business in this, because they'll take the 1% up front and they get the 1% trail for the duration of the contract. And what I mean by that is it's not the 7 years of CDSC window. If you have someone who buys this, we will pay out the 1% trail, one, as long as the advisor on record is still alive. 2, as long as there's an account value. So if they hold this thing for 20 years, we will pay the trail, the 1% trail each year for 20 years. That 1% trail is calculated on the contract anniversary date, and it's paid out quarterly. So really what you get is, if it's a $100,000 contract and then it's now, year 3 or the next year it's worth 110, we're going to pay you, $1,100, okay, now for year 2, but we're going to pay that out at 25 basis points a quarter. So we'll take the $1,100, which would be $275, and pay that out every 3 months. So you get the 1,100. It just is a stream quarterly as opposed to the $1,100 all at once. So that's just how it works. And we get a lot of people who've established their business, have like to really use this and like to, get paid while they're playing golf after they have $20 million worth of business with us on the books. It's not bad, because if you think about it, if it's $20 million worth of business you have with us in the trail setup, that's, simple math, $200,000 a year without selling anything new. So not too bad. So that is retirement stage 7. The current rates, which we just increased rates on Tuesday, a couple days ago, we have an 85% participation in our first trust, which is our tech-heavy value fund. We have 80% participation in Morgan Stanley, and that is our momentum-based fund. And you see, we build these proprietary indices out in these products to complement each other and complement the S&P. So Morgan is a global option with US, European, and Japanese commodities and investments there. First Trust is US based, but more heavy in the tech sector on the NASDAQ. And then of course the S&P, everyone knows the S&P. And we were able to get our S&P cap up to 5%, which is a highly competitive marker right now. Our participation's at 32. We usually like to have that in the 40, 45s, as high as 50, but that one is more sensitive to market volatility, and we've seen high market volatility over the last year and change. So that one has kind of hovered in the mid to low 30s. We also have an option, and the S&P option of a 1-year trigger. And what that is very simply is a bet that you are making that the S&P is going to be up for the year. If the S&P is up in the 1-year point to point, and it's up 1%, your client gets 4.25. If the S&P is up 10% for that year, your client gets 4.25. So really, the performance trigger is a fancy way, in some ways, of saying you're betting the S&P is going to be positive for the year. And if you are right, whatever amount of money is put in there will get a return rate of 4.25. So you can see there's 5 options here in this product without even looking at the fixed bucket. 5 options in here to diversify amongst, 2 proprietary indices and 3 S&P options that you can spread amongst. Another thing I'll point out here is the fixed bucket. This is all these strategies terms are 1 year. So we believe in the power of an annual reset. Your client's going to see account value performance on a yearly basis and be able to make adjustments to that on a yearly basis. In regards to that too, we have a fixed bucket that for 1 year is 2.1. Now I know some 5 years right now on the high side for a MIGA are at 3. Well, this gives you a pretty strong pivot point or resale point to talk to a client who's maybe being a little too conservative. Maybe they're looking at a MIGA and they're in their late 50s or early 60s, for 5, 6, 7 years. And you're saying, you're still in a window where that's ultra conservative. That might be something more when you're in your 70s, or, you have some income that you just want to put on the side. What if we looked at an index product that gave you, we could put half the money in a fixed rate bucket to start if you want to be half conservative, and that'll guarantee 2.1, and then we could be a little bit more aggressive with the other half and put it in First Trust or Morgan Stanley, or a blend of those in the S&P cap, where a 5-year at 3%, where you can hopefully get them 4 or 5% return even with the money in the fixed bucket. So a nice little pivot point there to move someone out of a MIGA product into an index product. Our next main product here is our Target Growth 10. This is pretty much a 10-year version of Retirement Stages 7 on a newer chassis. So I'll point out some of the differences. This was launched in the middle of the pandemic in June of 2020, and we've seen great sales in it. We understand that the 10-year space is highly competitive amongst many carriers, but it all comes down to cost, and it comes down to performance. And we've been able to put the indices in there that perform and be aggressive with this product. One of the difference between this and Retirement Stages 7 is this product has a guaranteed minimum account value, or 110% of the initial premium, less any withdrawals. And what I mean by that is, let's say you put $100,000 into it. From an account value standpoint, it will be worth, worst case after the 10 years, $110,000. So for some reason, if the indices don't perform or the markets are down for 10 years, we're obviously all going to have other issues that we need to focus on. But your clients will be guaranteed an account value increase of 10%, no matter what happens in this product. So nice, kind of warm fuzzy for them in a lot of ways. It should never come into play, but it's there if for some reason it's needed. So nice backup. And once again, that's built into the contract free of charge. And one thing go ahead.
Let me interject. So everybody on the call, we don't have a product that has basically a 10% yield guarantee.
Yeah.
we don't have one. That's huge.
Yeah, we think it's, and once again, free. It's not a rider. You're not paying for it. There's no administrative fee or anything like that. And that's one of the things I should have mentioned about Retirement Stages 7. It's, the only rider you can add is the ROP. If you don't add the ROP rider, once again, there are no charges, no fees, no cost, nothing for these products. It costs your clients zero. There's no annual $35 administrative fee. There's no FIPS or anything service fee built in. No, these are no cost, which is pretty miraculous. We do it through our investment team and make the money in assets under management at the end of the day. So this product, this Target Growth 10, you have access to the First Trust and Morgan Stanley, like I mentioned, on the Retirement Stages 7 and S&P, of course. But you also have a Richard Bernstein Advisors Select Equity Yield product that was our #1 performer last year to date for 2021, that you also have access to too. So you have a little bit more options here. So you can see you got 2 S&P, a fixed bucket, one's holding at the 2%, but you do have, this one is banded, so there's rates at under 100,000 and over 100,000. Our target for this product is a higher net worth, longer duration, $100,000 plus product. Then you can see Morgan Stanley, 90% participation rate. So if this thing does 10% in a year, clients are going to get a 9% return. First Trust, 95. So, that's pretty strong. They're pretty much getting everything. If it does 10% in a year for simple math, they get a 9.5% return. And then our RBA, it's a 50 basis point spread. So the first 50 basis points go to the house. So if this thing does 20%, and once again, these are hypothetical numbers. We all know the range for these products is really in the 5% to 7% range. I have seen indices return way higher than that, of course, but if this would do, let's just say 15% for the RBA, then your client, Delaware Life, takes the first 50 basis points, your client gets 14.5% return. So very, very strong potential upside. You can see that we do have a 5.1% cap on this product. RS7 is a little bit more of an S&P focused product, whereas Target Growth 10 is a slightly longer duration, but more focused on the proprietary indices. So indices around Morgan Stanley, First Trust, RBA. So you can be a little bit more aggressive in this product and potentially have higher returns over the long run. This, like our others, issues 18 to 80, okay, with non-qual IRA, SEP IRA, and Roth IRA money. I know I'm throwing a lot of information at you. I'm going to show you where you can pull all this, and Nicole and the team also has access to everything as well. So you don't have to worry about taking notes or writing anything down or trying to memorize any of this stuff. We have all the resources for you at your fingertips, which I'll show you in a little bit. There's standard states, light states for this. In California, we treat them all the same from a rate standpoint. California is just a 9-year version. They don't like 10 years and they want to be a little different. Fine. We're not going to fight it. Totally fine with us, Callie. You're good. Just approve
We're
the
just
product.
happy to be approved.
Yeah, absolutely. Absolutely. So California, it's really Target Growth 9, but we're not changing the name for California. Your last year CDSC is just 0. Okay, perfect. This one does have 10% free in year 1. And once again, nursing home, terminal illness waivers, all that. There are no riders you can add to this product. So this is straight accumulation, no charge, no fees whatsoever, okay? From a commission standpoint, is 7% upfront, which puts us, I don't think we're the number 1 in commissions, but we're right in it. This one also has a 1-in-1 trail with a couple different options in the middle if you want, like a lighter trail, 5.5 upfront with 25 basis point trail, 4% upfront with a 45 basis trail. Okay, we also do have a 1-on-1 trail on this as well. So that's 1% upfront with the 1% trail, which most likely will last for the 10 years of the contract without any withdrawals. But will also, if they hold it for that 20, 25 years, we will continue to pay it out. So very, with this bottom option, over the long run, a very easy way of possibly getting, as long as there's no major withdrawals, an 11% return on for the advisor here. You just have to wait a little longer. Target Growth, we covered the rates there. Retirement Chapters is another 10-year product of ours. This is our bonus product, and very simply, it is a 10-year term with a 5% bonus on any of the money that comes in year 1. So once again, Retirement Stage 7, Target Growth, Retirement Chapters, all flexible premium products. We will bonus up anything that comes in year 1, so initial premium, obviously, and any other contributions or additional transfers that come in. And that is a bonus on the account value. So if you give us $100,000, we will start the contract value at $105,000, and that is what will be invested in the indices and what they will be earning on. This was our first indexed annuity that we launched in May of 2015, so it's just a couple months, excuse me, not 7 years, this is a 10-year, so a couple years away, but it's been out for almost 7 years. It does have access to the First Trust, another momentum play called Momentum Asset Allocator. That version is through Deutsche Bank. It's done quite well. But like other bonus products, you'll see a variance here in the caps, rates, pars, and spreads. Because we are paying that bonus interest up front, it's almost like fronting interest a little bit. So there is a little bit of an offset on these caps, rate, pars, and spreads. Now, with that being said, one of the things that's very helpful with this product that we've noticed is that because there is a 5% bonus on anything that comes in year one, we see a lot of people who are trying to get out of products that have been kind of neutralized or weakened through the years, where they bought something that was another 10-year product, for example. They had great caps and spreads up front, and then all that stuff fell out of the sky. Um, in year 4 or something like that. Now they have a 2% upside or a 1.5% upside, but they have a surrender charge of 5%. Well, if they have a surrender charge of 5%, that, from a compliance standpoint, the bonus that we offer of 5% washes that out. So, we do see people coming out of the last couple of years early of a couple other products, whether it's, an index product or even a variable product that might have, let's say, an income rider that the clients are paying for that they know they really didn't need or no longer need. So you kind of have a little bit more openness to contracts that have a fee charged on them, a higher fee, a 4%, 5% fee. This is more of a suitable sale because the bonus helps wash that out. So I call it our parachute, our 10-year parachute product, to get people out of something else that they don't like, and we have a lot of happy customers because of that, and it washes out their losses when they leave. So that's what we see some of the usage for chapters 10. We are definitely going to look at this product into the summer and into the fall this year with our product team to see if we can make some modifications or modernize it a bit. So keep your eyes open. We'll hopefully get you some feedback on that in the future. Our last product here that I wanted to go over is our income product. It's our target income. It's a 7% roll-up with 5% benefit base on premiums in year one, and a charge on the income rider of only 1.05%. This product's been a nice balance for us in the sense that, if you put in $100,000, after the 10 years, you're going to get paid out on 175. Now, what's nice with this one is it actually steps up on a daily basis as well. So clients can, if their plans change, can turn on income year 5.5, year 6.5, year 3.5, whatever it is. And they wouldn't have to wait for, if it was year 5.5, a lot of companies, you turn it on and they would regress the amount, the locked in the income calculation point amount, back to year 5. So you'd lose that time served. Or the clients, knowing that, are going to have to sit there and say, geez, I really want to turn this on now, but I'm going to have to wait 4 or 5 months to get to year 6 to get the next value and go from there. Like, no, we don't do that. We just, we calculate and show you the points at annual intervals because that's the easiest way to do it, but we actually step it up on a daily basis. So a pretty unique factor here. With this product as well, you could turn the rider off whenever you wanted, and it solely, the charge would go away if something changes. If you bought it for income and then you turn around and said, geez, I don't need income now. I want a scratch ticket and I'm getting $3,000 a week for the rest of my life. I don't need income anymore. Like, I just need the cash value. Okay, you can turn off the rider at any point. We'll stop the charge, and it really becomes an accumulation product at that point. At 65, the payoff factor is 4.5, as you can see here. You can also do the payouts based off of joint payouts. So if it's, if you started the contract and you met the love of your life down the road and wanted to turn it on earlier and base it off of your new spouse's life expectancy as well, we'll do that. So the product is very flexible, not only from a premium standpoint where you can add to it, but it's very life sensitive, where a lot of these products you buy and they're set in stone and this is the way it's going to be. People's lives change. 1 in 3 plans, it's really more, 1 in 4 plans that you might make today would only work down the road. Out of the 4 that you made, 3 of them completely get blown apart due to changes in lives. So, we've built this product to be flexible around people. The other thing I really like about this for an income product is we didn't forget about accumulation. You have decent caps here for an income product. You have access, first of all, you have access from a cash investment standpoint to Morgan Stanley, RBA, and First Trust. And then on top of that, these are tiered at 100, 100 to 500, and 500. On top of that, you have competitive accumulation rates. So, we fully understand that. Yes, a lot of people buy things for income, and that seems to be their driver and their focus. But the product should be balanced as well, and it should be able to make money for people in the accumulation phase before they turn on income. Where you'll see a lot of our competitors, a lot of other products out there, they illustrate the best, they show you the best income, and then you close the sale, and that's fine. Um, but then when the client's sitting there and is giving you $500,000-$600,000, and they have a 2% cap, or their accumulation value, they're barely breaking even because their accumulation potential is so low that the fee is actually of the rider is eating it up. You should be able to still give someone $600,000, and if you haven't turned on income in a couple of years, 5, 6, 7 years time, hopefully have that value in the sevens or eights. And when you run these illustrations for us, we focus on that. Here's your income value, yes, but here's also your potential accumulation value. Because if someone doesn't turn on the income or doesn't actually execute on the rider at some point, they're going to want to walk away with an account value, and you're going to want to show them something that's worthwhile and has earned them some money. And we feel is a big game changer for us. So that's our products in a nutshell. We provide IAMS with all the resources that you could want to really dive into the further details here. Like if you really want to get into how the indexes are designed, how they function, how the products are done, we can do all that. We have it all here. At the end of the day, these options are designed to complement each other within the product. So, if one is doing really well, then another one should be doing okay. But you should never have a situation where everything's down. So they complement each other very well. So you can kind of set up your own asset allocation model within the product, invest accordingly, and continue to get a smooth ride up for your clients in the long run. So that is our products. Are there any questions that came in on that?
Nope, we do not have any questions in the question box. And
Okay.
just as Jay said, I will be following up with all of you after the conclusion of the webinar. I do have a email ready to go for all of you that does have all the product brochures, but here we go. All of Delaware's information is available without logging into their website, although we are happy to grab any marketing materials you might want for yourself to share with your clients. We are happy to get them out for you, but if you want to take a look, they do give you access on their website.
Yeah, you could still see my screen?
Yep.
Good. Yeah, so I know service is vital to IAMS, and frankly built such a great reputation around it that coincidentally enough, Delaware Life has kind of followed suit. We feel product design, pricing, performance are all very important, but in this modern age, the experience, the self-service abilities, and the support um, are a game changer and a differentiator for carriers. And so what we've done is try to be as modern in that sense from a support standpoint. So here is our Delaware Life homepage, right? You can go to this with me right now. If you click on products up here in the middle, this is going to show you and give you quick access to the products I was talking about. Here's retirement stages 7. So right here, once again, without logging into anything, you can pull a product brochure. You can pull the current rate sheet. It's right there. You can pull the product brochure for the product right at your fingertips. Index profiles. Here you can click on this, and here's all the details on Morgan Stanley. Once again, quick, right at your fingertips. Target growth, same situation right here. Rate sheet, S&P, RBA. Watch videos. So here's a Morgan Stanley video that you can take a look at or show to your client. Also right here at your fingertips is if you needed to do any quick reference data. Here are the index prices as of last night's close for the S&P, Morgan, First Trust. And then, if you had a client that said, oh, well, what did it do to, 220, 2221? What were the values? And of course, these are all without, caps, rates, and spreads factored in, but we can pull to 221, and it'll change it. You can do the math right then and there. So real quick, right at your fingertips. A little bit more in depth here. So that was products. Here's for financial professionals. This is for you guys. You click on this. You can do this right now. Okay, you don't have to be appointed with Delaware Life to have access to this. IAMS is already in the dropdown. Once you go in there and fill out your name, your email address, just like a standard website, in your affiliation, you're going to be list yourself in the dropdown as an agent and under IAMS. So boom, you're done. It will pass you right through to the site. And this is what our behind the scenes advisor site looks like. You're going to have a little less than me because I have a administrative view. So there's going to be some products here that aren't open, but let's focus on the main stuff. So here's your illustrations. You can go right in here and run an illustration. It'll save your information once you create a login. You can save your illustrations that you've run throughout the year. You can store them in here so you can always come back to them, click on them, and modify them. So if you ran something for Jim Smith and Jim said, run me $100,000 in this fund. Okay, great. And then Jim came back and said, you know what? I'm thinking about doing 250, and I'm thinking about splitting it in between Morgan and First Trust. Oh, you already have all the stuff filled out. Click right back in it. Just change the options. So, here's a new client, drop J in there. That's me. That's my address. If you guys ever want to send me some chocolates or a thank you note, I appreciate it. My cell phone number, my personal email address, I guess. And I am not 65, but I'm going to do 65. And then right here. Okay, what product do you want to do? So let's do Target. What were you going to say?
I want to see the income. I want to show everybody the income because
Oh,
I want
sure.
to show that. So, you know how most income products run out of accumulated value at about 76, 78?
Yeah.
Let's see what this one does.
All right, sure, you got it. So I'm going to pick the high band, so $500,000, right? Because frankly, income products, if you're doing lower numbers, they're not life changers. If you're buying a target income 10 in a lot of ways, it should be one of the last annuities you buy because you're buying it for income and you should hold it for the duration. So right here, you can see you can do flexible premiums. So you could, add money for a certain time frame, or let's say for the first 2 years, I could add, 10,000 a year, and then for the next couple of years, add 30,000. So you can add multiple assets there. So I'm going to do that, and then I'm going to take Morgan Stanley, and because you're buying an income product, why wouldn't you swing for the fences? Why? So let's do First Trust. I don't know, or we can do a blend. So let's do First Trust. So you might as well just swing for the fences from the accumulation side. All right. So the rider here. So this is where you can illustrate joint versus single, and this is where you can show the rider being turned on. So I'm going to do in year 11, so it's going to ramp up for the 10 years, and then you're going to turn it on afterwards. All right, so let's see what this looks like. I haven't run one of these in a long time. All right, preview. So page 1, boom, shows you the income. So it's showing you what the benefit base is going to be, what the benefit base is going to be at the end of year 10, and when you turn it on, they're guaranteed $48,125 a year for the rest of their life. There's your client information. This is page 1, easy income showing you right there. Now
that's competitive.
Now when we get in here, well, that's good to know. It's showing you some of the details. So the First Trust with a participation rate of 87%. Once again, this is an income product. And we're giving you access to our proprietary indices, and we're giving you a participation rate that's almost as aggressive, 3 points off as aggressive as our 7-year accumulation product. It's just something I think we did such a good job with that I can't believe others aren't doing this. So here's your minimum guaranteed values, and what this means is we got to show you worst case scenario. Let's say this thing did nothing over the years. What is this going to look like? Here's your account value, what it's come down to after the fees. Here's your actual surrender value with the behind the scene growth, and then here's the amount with the money coming out. So obviously when this thing doesn't last long, it runs out fast. So not real world. So here is the monthly Okay, here's the monthly based off of what would be February of 2022 on. So account value. Your account value, because it's invested, is increasing, and this is after the fee. So in an income product after 10 years, you're hypothetically projecting about a 60% return after the fee in actual account value. So $806,000 cash value. Okay, and then you turn on the income. So this person was 65. This turned on income at 75. Okay, this is the account value and how it's still performing in the indices, right? But with $48,000 a year coming out at an age 95, with receiving $48,000 for 20 years. So 48,125 times 20, just shy of $1 million, over $950,000 in income received for 20 years. They should still have a death benefit value or value to pass on if they make it to 95 of $215,000. This hasn't even zeroed out.
Now
That's
this,
that's a
that's,
powerful story.
yeah, this is a very powerful story. It might not be the tip top highest payout,
Yeah.
but to have account value, as you all know, because I talk about it on my Income Rider webinar, these products are designed to run out of account value between 76 and 80 years old.
And we're not even close. At
No.
80, at 80, well, here we go. 88, you're break even
Yep.
on our product, and you've taken $48,000 out for 75 to 88, 48,125 times 13 years.
Yep.
So I mean, that it's hard to illustrate that. It's hard to get people's attention to this type of a product because everyone's looking at the 48 number.
Right. And the other
That's
thing,
where it all
guys,
goes. But
this
this would,
doesn't come up in Annuity Rate Watch. So
yeah,
just so you know, when you run this Income Rider through Annuity Rate Watch, this isn't going to pop up. But ask your marketer for a quote on Delaware, because I think your client is going to be very, very surprised by that account value. I do have one question about this. Is available in almost, how many states is it available in?
it's a great question. I
40?
always forget to go over it because I think should be norm for the industry. All of our products are available in every state except New York. We do not design and build a product that's going to be excluded from a state, of course, unless that state changes their rules after it's built for some reason. So all these products are available in every state in the United States of America except New York, because it's New York. And,
Yep. And they're special.
and you should just leave. I should have mentioned that earlier. It makes things easier. You can, and the only variance in each product is going to be the CDSC charges, like I showed on Target Growth 10 in California and the light states and whatnot. The rates don't vary, the commissions don't vary. Nothing else varies except for, depending on the state, the CDSC window. That's it. So these are available everywhere.
That is fantastic news. Does anybody
Yeah.
else have any more questions? I only have one in my box. Jay, I so appreciate your time.
Yeah.
I want everyone on the call to keep these products in mind, because I do believe these are going to be one of the top 5. This is going to be a top 5 carrier with IAMS this year.
That's what we're hoping for. And once you start selling and using them, you'll see how easy we are to do business with. I mean, we try and make everything as easy as possible. You can download the applications. Our applications are fillable. If you want to type them out in a PDF format, go ahead. If you want to use Firelight, go ahead. It's all there for you.
All right. Well, Jay, I certainly appreciate your time. I appreciate everybody taking time out of their day in the middle of the day, kind of a weird webinar time for us here. We will be doing another webinar in a couple weeks. We will take another deep dive into the products. Look forward to talking with you all real soon. Thanks again, Jay. Have a great day.
You too. Thanks for all your help, and nice to have you guys on board. Take care now.
Thank you. Bye-bye.
Bye-bye.
Thank you, everybody, for joining me. I will be following up with you all today, hopefully by the end of the day. If not, first thing tomorrow morning. Have a